Hello guys, and welcome to my channel where we talk about everything price action. In today's video, we're going to be talking about drawing trend lines. If you look at my free course playlist, you will see that we talked about support and resistance, talked about major levels and minor levels. And trend line is just a form of support and resistance, diagonal support and resistance. So now, yeah, we're going to be talking about how to draw them sharp. So there's one of two ways of drawing them. Either you use a line chart or either you use wicks to draw your trend lines. So by line charts, that's what you would do. You would connect this to your consecutive highs and lows, right? The turning points of your trend. And this would be your trend line. So you want to make sure that all the turning points are satisfied. So we get one touch to the trend line, second touch to the trend line, third touch to the trend line. We recently got a false breakout, right? This movement right here. Right? Now we're expecting a retest to this trend line. So if you converted it, here's your trend line, right? So another way of drawing trend lines, which I feel like is the best one, is connecting the wicks, right? So you got a first touch, second touch, and upon the third touch, this is the movement that you got. Now a breakout, retested resistance. Now you're coming back to this level, right? So second thing about drawing trend lines, every trend line that you should draw should be used for a specific time frame. So if you drew a trend line on a monthly chart, it should only be visible on a monthly chart, right? Because let me show you this. Because if you go to the daily chart for the same trend line, if you go on lower time frames, look here, then it becomes messy and you wouldn't know what to do. So that's why I always recommend that you use trend line for that specific, what you call, time frame. So yeah, it's also important that you journalize your trade. So, okay, let's look at the higher time frame, and we're going to be using multi-time frame analysis. So we're in this long-term downtrend, right? Using a wick. Okay, you're in this long-term downtrend. Then sure, you're in this long-term downtrend, and we used this trend line as our guide, right? And now we broke through this diagonal resistance, and now we have to retest it as support so that you can confirm the new trend. Also, we have to break through this level right here so that you can confirm the new trend. Okay, let's use trend lines only. This is how you would draw it. Or So, okay, from this thingy, because we're in a long-term downtrend, chances are you're going to get a movement all the way to this level. We're not analyzing this pair, we're just using trend lines as an example. In a long-term downtrend, fine. So we're in a long-term downtrend, number one. Number two is we failed to create a new high, right? We failed to break through this previous high sharp. So if we get a confirmation through a breakout from this level, the market should retest our support. Right? And suppose you know your patterns. This is an expanding what, I don't know. So yeah, let's say this is your bias from the higher time frame. So the same principle applies. You get your bias from the higher time frame, and now you have to go to the lower time frame and figure out how this bias now fits in and how you can then jump onto this trade. So this is your first setup. This is your impulse, correction, impulse. And let's assume that this is a correction, right? So in a correction phase of a long-term downtrend, this is our bias on the higher time frame. So now we have to look for opportunities on the lower time frame. So yeah, assuming that we've taken into consideration the bias from the monthly, this is what we see on the weekly. Third touch, first touch, second touch. Now we should be waiting for a third touch. First touch, second touch, right? Now expecting a movement to the downside according to what we saw on the higher time frame, right? So now we have to draw our trend line so that we can get confirmation. So use the same logic. Yeah, same method. Connect wicks. So now we got a breakout, right? And the market found support here. Now the market retested this level as resistance. And according to our higher time frame, we should break through this level and then enter. This is what we should be expecting according to what we saw on the higher time frame. So now let's get confirmation on our lower time frame. So yeah, assuming that that's what you saw, this could be another movement right here. And then a week. So okay, sharp. Looking at this right here, the market could either retest this trend line as support, then you'll get a retest here, corrective pattern, then movement to the upside, retest this resistance, and then go here from what we see. So this is how you would trade what you call trend lines using patterns, right? But like, I wouldn't recommend it as such because it's not a high probability trade. Why? These things don't exist in isolation. If you use them with the aid of major levels and higher levels, this is where you'll get high probability trades. But now we're not talking about how to get high probability trades. A video on that has already been released. Now we're just talking about how to draw them. How you draw them is you connect the wicks, basically. You connect the wicks to critical turns on a trend. So your critical highs and your critical lows on a trend. And then if you use trend lines low, you can now incorporate that with multi-time frame analysis and what I taught you there. And then, yeah, this is how you would get high probability setups using trends. That's all I have for you today. Check out my other videos. Hope you enjoyed this, and check the description box below. For now, bye.